So now we are going to discuss the 2019 advanced level NPV calculation, right? So how to perform the net present value calculation. So 2019. So go to the question, that is question 6. Sorry. Yes, I think question 6. So you guys can do this calculation with me itself. Okay. So question number 6, the B part. Okay, B part. So let us do this calculation. Question number 6, the B part. So first of all, let us read the question. Calum PLC, the public listed company, is considering acquisition of a new machine, right? Replacing the old machine. So why we are performing NPV calculation? To accept a project or to reject it. Okay, you have a proposal or any project, are you going to accept that or are you going to reject that? Now here, what is the project? They are purchasing a new machine, replacing the old machine. That's the scenario. The management accountant of the company has provided the following estimated information in relation to the new machine purchase. They have given purchase price, useful life, residual value. Those things are given. Further, they also have given the additional information. Right? Now required the schedule of cash inflows and cash outflows of the project and its NPV. So first of all, let's do that. Okay, this is 10 marks. So we are asking the A, no? Sorry. Under B, the first one. First requirement. Yes. So then, dear students, now here how many years do you have? You have 5 years. No, so let us draw this. Okay. So here let me say year 0, year 0. Then let us have year 1, year 2, year 3, year 4, then finally the year 5. Right. So then here we are going to have the cash inflows, dear students. Cash inflows. Then here let us have the cash outflows. Cash outflows. Okay. Fine. Then here first of all they have purchased the new machinery, right? So purchase price they have given. So we are going to do this in rupees in 1000. Okay, rupees in thousands. Right. Purchase price 1,200,000. So here let's take as 1,200 because we are doing in rupees in thousands. So you can say purchase of new machinery. Purchase of new machinery. How much? So that is going to take place in the year 0. Initial year. Year 0 only you are purchasing the machine. So that is going to be minus 1,200. You know, when you purchase, the cash goes out. So outflow. So deduct it. 1,200. Useful life they have given residual value 200. So that is, you can get it at the, let us see the additional information what they are saying. Okay, let us come to that. Before that, let us come installation charges. So installation charges is also a cost relevant to the purchase of new machinery. So you need to deduct that as well in the year 0. So that is 75. Here you can say installation charges. Installation charges. Right. Then, dear students, site preparation expenses, that is also relevant to the purchase of new machine. That is 125. So that is also taking place in year 0. So that is site preparation expenses. Site preparation expenses, right? Expenses, that is 125. Deducted. Annual maintenance cost they have given. Now annual maintenance cost means after this machinery, the new machinery comes to a certain condition where you can use it. After that only, you will spend the maintenance cost. Understood? Therefore, it will take place from year 1 onwards, not at year 0, because maintenance after the machine comes to a level that you can use it. After that only you will spend for maintenance. So that will take place from year 1. So you can say here maintenance cost. Maintenance cost, okay, that is going to be 100 annual, no? So for all the year 5s you need to deduct 100. as simple as it is. Okay, right. Now let us come to the additional information stuff. Okay, so now there is a residual value, no? So that is at the end of the year you are selling it for 200. So you can say that is a cash inflow, dear students. So here you can say residual value. Residual value, how much is that? That is given 200. So at the end of the year 5, you only are selling. So that is 200. Residual value is 200. Then the annual working capital requirement of the new machine is 300. That means additional working capital requirement of the new machine is 300, which will be recovered at the end of the project, it seems. Therefore, you are incurring that at the 0 year as well. So here you can say deduct 300. That should be what? That should be working capital. Working capital. And also they are saying further that this 300,000 you can recover at the end. That means at the end of year 5 you can recover this. So here 300 plus. So here you can say working capital recovery. Working capital recovery, right? As simple as it is, right? Now what is they saying? The annual, the expected additional information to the expected annual savings in operating cost due to the new machine is 500. Now because you have purchased a new machine, now its efficiency is high compared to the old machine. So there is a cost saving. That is 500 going to take place on year 1 onwards. So you can say plus 500. So here 500. So what you can say here is that you can say cost saving. So cost saving is going to be how much? 500, here 500, here 500, here 500 and here 500 cost saving. Right, done. Then if the new machine is purchased, it is estimated that the old machine can be sold for rupees 400,000 beginning of the project. Now there is no use of keeping the old machinery because you are purchasing the new machinery. So they are going to sell it at the beginning of the year. That means year 0. For how much? That is for 400,000. So then you can say here 400 and say that is the new machinery. They are the old machinery. So you can say selling price. You can say selling price of old machine. Then here you take the total cash inflows. Take the total cash inflows here. Total cash inflows. So once you take, dear students, so here it is going to be 900. Here it's going to be 500. Here 500. Here 500. Here 200 plus 300 plus 500. That is going to give you 1,000. Then also take the total cash outflows. Okay. So let me say here total cash outflows. So initially 1,200 plus 75 plus 125 plus 300, that is going to give you minus 1,700. So let me check for the accuracy again. 1,200 plus 75 plus 125 plus 300, that is going to be 1,700. Then here 100, here 100, here 100, here 100, here also 100. Okay, fine. We are done with that. Then let us come to the net cash flow. What is the net cash flow? So here minus 1,000. Now here we have done I have done a small mistake. That is here the selling price of old machinery, that must come for the year 0. They are selling at the year 0. No, by mistakenly I have entered there. So that is how much, dear students? That is 400. Okay, so that is coming here. Okay, here. So here total cash inflow of the year 0 is 400. Then minus 1,700 plus 400. So the initial net cash flow in year 0 is going to be minus 1300, minus 1300. Then here 500 minus 100 is going to give you 400. Here also 400. Here also 400. 500 minus 100, 400. Right? 500 minus 100, 400. 1000 minus 100. Total cash inflow is 1000. Here total cash outflow is 100. So net cash flow is going to be 900. 900. Now you need to be very careful. We are going to see the present value. Now many students wonder why we are calculating the present value. Now when it comes to the management accounting, when you are accepting or rejecting a project, you need to convert all the future cash flows into the present value. You are standing today, you are living today. You are going to check whether today, if you invest, is it worthwhile. If it is worthwhile today, you accept. If it is not worthwhile today, if it is not worthwhile today, you reject. So here, see here, in the year 1 you are getting 400, but year 1 means, imagine now you are at year 1, no, but what is the value of today then? What is the value of that today? Present value. In year 2 you are getting 400, but today you need to come for today. What is the present value of that today? In year 3 you are getting 400. Okay, fine. What is the present value of that today? So you need to consider the present value. For that you need to calculate the discounting factor. Now here they have given the discounting factor, dear students. Here they have given, examiner has given the discounting factor, so please take it. Now in year 0, the examiner won't give you the discounting factor. Don't see up and wait at the examination. It is always 1. Year 0 always 1. Year 0 always 1. Then let us come for year 1. The examiner has given you, so please take that. You don't calculate. I will say how to calculate as well. 0.89. 0.89. Then year 2 is 0.80. Then year 3 0.71. Year 4 0.64. Then year 5 0.57. Right? Why we are discounting? Because you need to consider the present value. Now in year 5 you are getting 900, but what is the value worth of that today? Present value. Because when we are calculating NPV calculation, we are checking today, present value. If the present value, the project is positive, you accept, or is sorry.com, you reject. Then you can calculate the present value. How to calculate the present value? 1300 into 1. 400 into 0.89. 400 into 0.80. So like that. So use the calculator. So let me calculate that. So here, however, it's going to be minus 1300 present value. Then there 400 into 0.89, that is going to be give you 356. 356. Okay, dear students. Then let us move forward. Now here, yes, 400. Yes, 356. Then here 400 into 0.80, that is going to give you 320. Then here 400 into 0.71, the present value is going to give you 284. Now in the 400 into 0.64, the present value is going to give you 256. Now see, here also 400, here also 400, here also 400 in cash flow. But see, the present value of year 2 is 320. But the present value of year 3 of the same 400 is 284. And the present value of the same 400 in year 4 is 256. That means what? When the years are increasing, the today's worth is reducing. I hope the idea is clear. 322 decreased to 284, 284 decreased to 256. So when the same, not 400, 400, 400. So when the years are increasing, the present value is decreasing. See, year 4 you are getting 256, but year 3 you are getting more. Year 2 you are getting more than that. So now this one, we have 900, no, so 900 into 0.57, that is 530. 513 students. Then here the NPV. What is the NPV? So you get the summation of all the present value. This plus, this plus, this plus. Get all the summation, then you will be getting the net present value. So let us calculate that as well. Make sure you do this with me itself, my dear students, then on it's going to be clear. That is going to be 429. 429. Very easy, see, 429. The NPV is 429. Now the examiner is asking, that is the answer for the first one. NPV is 429. So then, so we have 429,000 because we have done this in rupees in thousands. Then, based on the NPV method, recommendation whether to purchase the new machine. Yes. Now see here, you have converted all the cash flows to today's worth, the present value. Then you have got the net present value. The NPV is positive. The net present value is positive. Then you can say, since the NPV is positive, it is recommended to purchase the new machine. So that's how you are going to write the answer. So make sure you write it down in your writing book. It is recommended to purchase the new machine because net present value is positive. Imagine you got a negative value. Then since the NPV is negative, this project cannot be accepted, right? Like that. But here it is positive, so here you can write it like this. I'm going to write the answer for the second one here. Since NPV is positive, you can say can purchase the new machinery. It is recommended to purchase the new machinery, right? The new machine. It is recommended to purchase the new machine, right? Now imagine, suppose in your exam, 2025 exam, suppose sometimes they can not give, the examiner sometimes they don't give the discounting factor. Sometimes you need to calculate it, right? Because now they are allowing calculators. In that case, what you need to do, I will say now. So I will erase this stuff now. So there is a small formula for that, dear students. So no need to memorize, with practice. Accounting means practice. Don't try to memorize anything in the accounting. It's a logical subject as IGT. Right. Now this is the formula. 1 over 1 plus r to the power n. R represents the rate. What is the rate they have given? In this case, they are using, what is the discounting factor rate? They have given in the question, I think. Discount factor 12%. So this R represents the discount factor, the rate. Okay. Then this N represents the number of years. The year to which year you calculate. For an example, if you want to see the present value for year 1, put 1 here. If you are calculating it for year 4, put 4 here. Now let us consider for year 1. For an example, then 1 over 1 plus, now 12 you need to divide by 100. So once you divide 12 by 100, you will be getting 0.12. Then to the power n. Now for year 1 you are calculating, so year 1. Then you can use your calculator and put it directly, okay? So let me show how to do this as well. So here 1 plus 0.12 is going to give you 1.12 to the power 1. So just do this using your calculator directly. You don't need to show any methods. 1.12 to the power 1, that is going to give be 0.892. No? So let us round off, because the examiner also has given 0.89. So look the past paper, 0.89. So here you have 2 after 9. So once you round off, this is the one. Now for everything I am not going to calculate, but let me take for the year 5, okay? To understand the concept. You know the NPV well, but you don't know how to calculate the discounting factor. The examiner hasn't given it. Then you are in a trouble. So you need to know that. So now let us calculate for year 5. Year 5 quickly. So here 1 plus, then divide 12 by 100, 12% now. So 0.12, and you are calculating for year 5. So put 5 here. Now use the calculator and calculate it. 1 over 1 plus 0.12 to the power 5, you are getting 0.567. So once you round off, it's going to be 0.57. So see how you are, very easy. So this is how you can calculate it if the discount factor is not given. So that brings the end of today's the NPV discussion.